Welcome to my channel. Today we will be talking about the best use of funds when applying via Lendio. Lendio is a direct lender. It's a marketplace that connects you with a network of over 75 different lenders offering various types of financing. Because of this, the best use of funds really depends on which specific financing option you are approved for and what your business needs are. It's not a one-size-fits-all answer, but here's what I've learned from my experience and research. Match your need to the loan type. The single most important principle is match the purpose of the funds to the type of loan you get. Lendio's partners offer products tailored for specific uses. Applying for a loan whose terms align with your spending plan is crucial for responsible business finance. For long-term investments, expansion, or major equipment, if you're planning a large, one-time expense like purchasing new machinery, a commercial mortgage for buying property, or a major business expansion, you'll want a loan with a long repayment period. Look for business term loans or, ideally, an SBA loan like the 7A or 504, which offer lower rates and longer terms. These are best used for things that generate income over many years. For capital expenses, equipment, the money is strictly for acquiring a new forklift, commercial oven, or specialized software. An equipment financing loan is often the best fit. The equipment itself serves as collateral, making it easier to secure and keeping the funds dedicated to that purchase. For short-term needs, cash flow gaps, if you need a flexible safety net for managing day-to-day operations, seasonal inventory, or bridging the gap between invoicing and getting paid, a business line of credit is fantastic. You only pay interest on the money you actually draw, which makes it highly efficient for working capital. Similarly, short-term loans are great for unexpected, immediate costs, or a brief surge in inventory. For quick cash against unpaid bills. If your main problem is slow-paying clients, accounts receivable financing or invoice factoring is a most direct solution. You're essentially getting an advance on your outstanding invoices, which instantly improves your cash flow without incurring new long-term debt. My personal insight: the best use of funds is always a use that increases your business's ability to generate revenue or significantly reduces operating costs. Never use borrowed money, especially high-interest short-term loans, to cover chronic poor performance or simply delay failure. Be specific in your application about exactly what the funds will accomplish, like purchasing a new $50,000 CNC machine to increase production capacity by 30%. Lenders like this clarity. With that being said, thank you for watching. For more finance videos, kindly check my page. Please like, share, comment, and subscribe to my channel. Thank you.